Okay, guys, hope everybody's well on this lovely, breezy afternoon, evening. It's been very dark, very early now, isn't it? So everyone getting set for the winter. So yeah, I think we're pretty much ready to start. I can see a couple more people jumping in. So thank you for joining us. Great to have so many people on this webinar. And yeah, we're going to jump into it now. If you have any questions, any queries at any point, please feel free just to shout them out. We've got a question, we've got a hand raise, whatever really works best for you. So let's jump into this particular webinar tonight. So a bit of an introduction first. So my name's Stephen Moss. I'm the Managing Director of Sourced. I am classed as a vastly experienced, so I think that means that I've got lots of property scars more than anything else, and successful property investors. So we've got a very, very large portfolio of properties, which these days is more development properties, development sites, conversions, that sort of stuff. But I've been doing it for almost 20 years. I founded and exited a national business called Legal for Landlords. So we were the largest tenant eviction company in the UK. So I learned an awful lot in the property sector from that side as well. I also created and launched a Sunday Times top 10 phone app in the property sector whilst at Legal for Landlords. So that was one of my claims to fame. And yeah, I mean, property for me is, it's more of a passion. It's more of a love. Love looking at property opportunities, looking at what I can do differently with them, how I can get the most out of them, what the structure is, and really kind of finding some weird and wonderful ways. And I think one of the things as a younger man that attracted me to property was the fact that you can just throw your imagination at something. You can literally let your imagination go with the different structures and flips and terms and overall performance of the property portfolio world. I've developed a platform, managed thousands of references, which is also part of Legal for Landlords, so we did tenant referencing. And this is all before I launched Sourced. So Sourced Property Investment Group. I'll give you a little bit of information about that, but I'm going to introduce you to the team first. So we have a specialist team, an experts mentor group, focusing purely on HMOs. So that's some of our guys. And we also have a head office and national network, and this is just some of the team within that network. So quite a big team, lots and lots of experience. Lots and lots going on, hundreds of property deals going on, to be fair. Really, really exciting stuff as well. Stuff that you love to get your teeth into and understand it better. And a lot of these guys that we started as franchisees and grown with us. We've got over 120 franchisees now. But yeah, it's nice to kind of see people go through that journey and what they can achieve. So the Source Group I mentioned earlier. So this is Sourced. We've got 5 sections to our business. We've got property, capital, developments, care, and franchise. So our property sector is all about finding and building portfolios. Our capital side is our peer-to-peer lending platform. So if you're looking to invest and diverse your portfolio, it's a great way to invest into projects, minimum sort of £5,000-10,000, and hands-free, so you're not going to deal with the tenants, etc., etc. We've got our own developments. So we've got currently over £270 million worth of developments that we're building across the UK. We've got our care sector. So our care sector is very focused on identifying opportunities that we can build or convert for the care industry. And then we've got our franchise arm as well. And this is the bit really we want to talk more about tonight, is introducing the franchise model, what that means, what it offers, and how we work with people as well. See a couple more people joining. So hi guys, hope everyone's well. So our franchise side of the business is split into 2. We have our network and we have our partners. So our network is what we launched 3 years ago. So 120 franchisees, and it's very much focused on building a property business and ultimately becoming property developers. So it's quite hands-on. It's quite time consuming in terms of it's a business. It's people are going through phases of learning to build property and ultimately to become large-scale property developers, and doing very, very well with it. And we have our partner section of the franchise side of the business as well, which is more, it's focused just on one strategy, which is HMOs. It's more hands off. So if people have full-time jobs, but understand how how important property is or how well property performs, and they want to grow a portfolio alongside them, then it's our partner side. We've had a question pop up. Oh, someone's hand raised, sorry. Feel free to ask a question. It's not a problem. If you want to type it in, I can share it with the group if that's okay. So yes, we've got our partner side of the business as well. So some people join our partner side that ultimately want to get into property eventually, but initially looking for the help, support, and development of growing portfolios. And the reason I'm kind of expanding on this side of it is because it's a focus on HMOs, and that's what tonight's presentation is, HMOs. So it's more to kind of give you guys an understanding of what our experience is within that sector. As a business, we analyze over 2,500 deals every single month. We have over 100 franchisees, 120 at the moment. We've sold lots and lots of different types of structures and strategies. We've raised over £10 million in funding this year. We've currently got a pipeline of over £35 million worth of property deals, working with investors from over 69 countries. So a little bit of a snapshot of the business and the different arms of the business, and particularly, as I say, we're going to drill down on the HMOs. Tonight's presentation is going to look at how we analyse, how we structure profitable HMOs. And this is sort of a higher level look, because ultimately for us to drill this down, these are sort of things that we cover in our training days for our franchisees. But what we've tried to do is pick elements that will help you in your journey and hopefully show you the sort of things that we look at. As a business, we've marketed over 1,000 HMOs across the UK and helped investors grow their portfolios. And I'll show you some of the examples and the figures and how they break down as we go through the presentation. So I'd like to think we're in a really good, strong position to show and help people in this sector. As a business, it's the property world. We've kind of developed our training to a point where we feel we've got a real good success and a real good machine that helps people and the flow. We have 6 steps that we teach when we're training people. So, and regardless of the strategy, generally it's these 6 steps that we follow. So the first one is research. The second one is sourcing. The third one is crunching the numbers. The fourth one is securing the property or the deal. Next one is structuring. And then finally, we've got packaging as well. Packaging can be different things. Some people think packaging is just purely to sell. Actually, if you package the property right, you'll attract different types of finance and funding opportunities. And also it's nice to have an extra option when you're dealing with a particular HMO. So I thought it'd be good tonight to kind of look at these different steps, how we apply them, a bit of a higher level overview of how we deal with them, particularly in the HMO market and sector. So first of all, research. So when we're looking at research, we look at 3 key things. We look at location, we look at property, and we look at the tenant. So from a location point of view, obviously location, nowhere else to start. What we're looking for in location, so we're looking at growth, we're looking at the metrics. So when we talk about the metrics, we're talking about over a period of time. We're not just looking at a snapshot of what the market is right now. We're looking at rental prices, we're looking at sales prices, infrastructure. So infrastructure is a huge one for HMOs. So really, really good example, HS2. So when it was announced about HS2 and where it was going, I think it was through Stoke at the time. So lots of people bought properties for HMOs in Stoke, and then they decided to move it to a nearby area. I think that's right, or it might have moved to Stoke. It's one of the two. Infrastructure is a big, big thing, because what does infrastructure grow? Infrastructure drive, it drives growth. So therefore, it's really, really key to understand what's going on in an area. Legislation. So, how does legislation, particularly with HMOs, be affected in this area, in this location? And that's a key thing as well for HMOs. You need to make sure that, is an area in a particularly tight licensed area, and what are the understandings, what are the metrics that you need to follow to get that through. Regeneration as well. There's been a lot of property investors and people we work with who have identified key locations and in regeneration areas, and it's been probably a longer term investment. So rather than looking at buying a property and flipping it on straight away, they might have had to keep it for 3 to 5 years, but ultimately during that time there's been regeneration happen through the area, and that again has driven the growth. So therefore they've had an increase, and that's been their plan, and it's been let out during that regeneration period as well. from a property point of view. So ultimately, you know, a lot of people, when they look at HMOs, the first thing they look at is the size. And one thing you need to get used to when you're looking at HMOs is not the size of each room as it stands now, but actually the footprint of the floors, because that's the nice thing with a lot of HMOs. You can actually move the walls, you can, you know, resection them. If it's a newer house, it's stud wall. If it's an older house, you might have to put some RSJs in place, but ultimately you've got to look at the whole footprint and say, right, okay, how can I lay this out? What's best suited and how's it going to work? License again. So although there are elements of, you know, looking at it as a location, you also need to look at it as a property, because if it's a large HMO as an example, and, you know, we've had them in the past where we've had larger HMOs, we've been to see them, and it's an older building. And then when we start to look at things like, okay, we need a sprinkler system, well, actually to put a sprinkler system in this property because the walls are, you know, 2 foot thick, this is going to be really expensive. And we've got to account for that when we're putting our figures together and when we come to the stage of crunching the numbers. Facilities. So what facilities are within the property or surrounding the property that are going to help people? One of the things that, one of the reasons I put this into the presentation is, if you look at the kind of HMO cycle, it's quite funny. I was talking to a chap yesterday about HMOs, and you know, I own HMOs and have owned a portfolio of HMOs, and you know, I 10 years ago decided, you know what, HMOs are done. Everybody's got a HMO. There's too many HMO. The market's flooded with HMOs. And what's quite funny is actually the HMO itself hasn't gone as a strategy. It's just developed, and it's changed through those sort of last 10, 15 years. To the point where if we send the HMO out to our database, which if anybody's registered with us for deals, they'll see that we send out probably around 40 to 50 deals every single week. The HMO is the most popular one that we send out. It always generates the most leads. So clearly there's a need and a demand for it. But actually from a tenant's point of view, the type of HMOs changed over the years. So it's now people are looking for ensuite HMOs, maybe a kitchenette, maybe, you know, a bigger shared space, or little tweaks like that that will keep people and attract people back into the property. Layout is really key as well. So again, we're talking about having maybe an ensuite facility or larger open spaces, or you know, things that keep it fresh and wanting people to come back. Standing out is quite a new one as well. So, you know, I'm sure everybody's been through the phase that there. I know my wife went crazy when the phase came out of having a feature wall. I think we had a feature wall in every single one of our rooms in the house. And it's the same with the HMOs. You know, if you can put that one feature wall in the property, it changes the whole dynamics of the room, and it suddenly makes it feel a bit more quirky or nicer. Tenants as well. So looking at a research of tenants. So what type of tenant are we aiming for? We're going to touch on the different types available, but ultimately it's important to start with a plan to know who you're aiming for and their profile. So, you know, is it somebody that's coming traveling to the area to work, so they'll be there Monday to Friday? Is it somebody that's going to be, you know, living there on benefits? Is it going to be students? Is it going to be, and these are the types of tenants that you'll typically look at when doing your research and doing your crunching your numbers. Demand as well is obviously really important. So, you know, a lot of people we speak to from a HMO point of view, it's quite interesting because our partner side of our business generally comes into play when people start looking at wealth management. You kind of hit that part of your life, don't you, where you think, well, actually, if I start planning, and then eventually that leads onto the legacy. And the demand as well is quite key, because our conversations move on to the demand, because we start talking first about, okay, people want to invest into property, and in their head they kind of picture it that actually, if I can build up a portfolio of buy-to-let family homes, I know they'll always be rented, I know that's ideal, but ultimately to get to an income level of $5,000 a month to do that, you need about 20 of those, and that's very, very difficult. It will take a long time with a lot of money. Whereas actually to achieve that, you need 3 or 4 of them for a HMO portfolio. So it's a lot quicker to achieve in different ways. But then people's next concern is, well, you know, will I fill them? Will it be, you know, and it's important to look at that demand. One of the tools that we use for that is Share Room. So if you haven't had a chance to use Share Room, it's got a really good tool. When you're searching an area, on the left-hand side, there's rooms and then people. So you can actually see how many rooms are in an area. So that if we searched in Warrington, there could be 20 rooms available. And then if we flicked it over to people, there could be 50 people looking. Well, straight away, that shows that there's a demand. It's also a really good tool as well to look at what prices people are willing to pay for the properties as well, and the types of rooms. and to see your competition, because ultimately that's who's going to be competing in the area. Tenant as well, it's really important from a research point of view to understand, are they going to need public transport? Are they going to have their own cars? Because if they're going to have their own cars, is the parking facilities, and just kind of working it back. So again, working on this sort of profile and a COVID de-risk as well. One of the things that kind of happened to me throughout the COVID period was actually a realization that, these tenants in HMOs kind of start to become their own communities, because they're in lockdown, and for the foreseeable future, we don't see this changing. So, I think it's important just to keep it in the back of your mind that actually those open spaces and the types of tenants you have in, if you're having a particular profile and you can get people similar, then it's creating its own little community, and there's more chance that they'll look after the property and they'll be there longer, and there'll be a lot less hassle, etc., etc. So research is your first kind of step forward, and these are the important steps that we would follow, and the tools we would use. Another useful tool as well I would recommend is property data. If you haven't seen this already, I believe you can get a free trial, but if you go on, you can get lots and lots of really good data. Postcode search, house prices, rental rates, yields, capital growth, sourcing tools. One of the really cool features that these guys have as well is actual HMO room rates and HMO room yields and different types of rooms. So it has like double bedroom, single bedroom, double bedroom en suite, single bedroom en suite. So there's a real good variety in there, giving you, a better understanding of actually, what's happening in an area and in a market. So really good tool. It's not that expensive, to be fair, even if you carried on with the subscription, but generally speaking, they've got a free option for you to have a look. Sourcing. So, another big step. So you've identified where you'd like to buy a HMO, identify what type of HMO and type of tenant you'd like to look for. The next thing is, how do you find that HMO? So lots and lots of different avenues that we teach. So, sourcing is in the secret. For me, this is the hardest part. I genuinely think sourcing is the hardest part. And the reason that I say that is because I've done this for a long time, and people don't realize or appreciate just how much work or time goes into finding the really, really good deals. As a business, we've obviously built systems, and particularly our network. As a network, we share a lot of deals and we work together on deals, joint ventures, etc. But it's interesting to see where people source. You can find HMO lists. So if you speak to your local council, they have a register of HMOs. So if your view is to take a HMO that's existing and you're comfortable with that, personally, that's not something I would do. I always feel that, well, why buy a HMO that, that the seller's going to be selling that at the maximum price? Why not buy a house next door to it and convert it and have the uplift in value myself and know what the history is with the property, know what condition it's in, have a better understanding of that property. So it's down to yourself. But typically, I'd look at the register to see where the properties are. I'd then start looking on those streets to say, okay, am I finding any kind of patterns? Am I finding anywhere that, good locations? Because again, if there is licensing or planning in any way, shape or form, if there are already HMOs on that street, you've got a better chance. And also as well, speaking to owners, you get addresses, so you can always write to them, get a gauge, if they're looking to sell, etc., etc. As I say, we have personally, we have data feeds that come in, identify and analyze properties for us, and then highlight if they're HMO suitable. And then our team pick it up from there. Other ways of putting adverts. Ultimately, property data is actually quite a good source as well, because you can analyze the square footage. If anybody's not aware, one of the really cool tools to use for properties is an EPC. Find out the size of the property then on the EPC, and again, you can start working back in terms of square footage and how many rooms or en suites, etc. you can get into a property. Rightmove and Zoop, obviously the two largest property portfolios or property portals in the UK. Another source are commercial agents. I think commercial agents are probably the most underused tap of resource in this sector. Personally, I found lots and lots of deals with commercial agents, because generally what you find is that a surveyor in an area goes out and looks at properties, and then the client asks them to sell it, and they just naturally put it on their website. So it's small independent surveyors that sell for their clients as well. And you'll find that stuff there isn't on Rightmove, it isn't on the big portals. So, and also you can have a better conversation with that surveyor, or they've got a better relationship with the seller to hopefully get a really good deal. So yeah, obviously tonight's webinar isn't particularly about sourcing, it's more about analysing and structuring, but a few tips there hopefully which will help you identify a good opportunity. Looking at the key figures, so in terms of the crunch, so this is where I think sometimes people can get too hooked into this or too analytical. And if you're an analytical type of person, you've just got to be aware that, look, there's key figures you need to look at. It's not a case where you have to overanalyze. You need to look at the purchase price, conversion costs if you're converting it to a HMO, the rental income, operational costs, the GDV, and return on investment along with yield. And ultimately, that will drive to the profit. I'm not going to spend lots and lots of time on this particular slide because what I'd rather do is actually show you a couple of calculators that we're using and how we do it, because I don't think there's a one glove fits all. We use actually two, and I'll explain that when I jump into those to show you, give you a bit of an overview. So perfect timing. Let's jump into that. So the two calculators that I'm going to look at here, first of all, I'm going to look at this one, which is our deal calculator. So as a business, we use this, and this is really sort of analysing more conversion, refurbishment, development, those structures. You can use this to input things like HMOs, buy-to-lets, because as you can see here, step 2, step 3 are for a refinance or renting out. This particular property isn't a HMO. I was actually working on this one earlier today. So this is actually a property that we're funding, but it's there as an example. So you can see on the first panel, we have surveyor's valuation, purchase price, upfront costs. So it's not all been completed properly. And on this particular one as well, you can see that we're actually using peer-to-peer as a funding metric as well. The second column is the cost during the project. So obviously build cost, conversion cost, any planning costs. So the idea of this is ultimately we're looking at this to say, right, okay, if we purchase this as a HMO, analysing it from a finance point of view, what's the profit if we were to sell this on? If this was, if there's a project that we want to do that. Alternatively, we do have other ones. So this one, we spoke to a client about this one a couple of days ago. Quite an interesting one. So this is one that our franchisees found, and this kind of summarizes our service really in terms of our partners. So a franchisee found an opportunity. It's a pub. They exchanged on it. They went and got planning permission on it. So that's a big commitment. And they got planning permission to convert it into a HMO. Now they've done all the research. They've then got the planning permission. They've done the calculations. They've done the drawings, they've done the build costs, packaged that up to then present it to our partners to say, right, okay, here's an opportunity. I've done all this work for it. You can see here, there's two options. You can purchase this cash or you can purchase it as mortgage. If you were to purchase it as cash, the purchase price is 150,000. My sourcing fee is £10,000. Now, the reason that their sourcing fee is a little bit more expensive is because they've got planning permission and they've exchanged on the property. So it's a little bit more than what it normally would be. There are legal costs, refurb, furniture, and then a project management fee. And again, this nicely summarizes how we work with our partners in terms of, our experienced mentors can identify these properties and can project manage them if required. Alternatively, you could say, no, I'm going to project manage this myself and just take that cost out. We then look at the rental prices, which we mentioned earlier. We look at the utility bills, the management costs, and 10% for void and for maintenance. And that's broken down then. And this figure over here is actually wrong because I was playing about with it earlier. But you can see here that, capital invested, because it's cash, net income per month, net income per year. So this is if it was a cash purchase. Now, ultimately then, we will position an option to refinance the property to say, okay, if we were to refinance it, we've spoken to surveyors and we'll get between 12 and 14%. So on this particular one, let's say we get 12% return. So it's valued at £405,000. We purchased at 150, spent 160 on it. We get 75% commercial mortgage. So left in the deal is just over £50,000. So again, we're looking at the rental rooms, we're taking out costs, we're taking out voids, and then we're taking out the mortgage cost as well. And that leaves us with an income of 15 or just under £16,000 per year. So that kind of summarizes it. Now, some people, often talk about HMOs as we refinance and take all our money out. Now, probably 1 in every 20 that you're able to do that. It's not that straightforward, or it used to be, but generally speaking, surveyors on the refinances are getting tighter and tighter and tighter. So we keep it quite sensible to say, in this particular area, we've spoke to 2 surveyors, and we believe between 12 and 14%. And we put those figures on there. And obviously, before you purchase this property, you can do your own research and look at the refinance as well. On this one, what's quite nice is, and this kind of leads me on a little bit further down the line in terms of the structure, but this is a really good example. So this particular property was actually split across 2 floors. So we've got ground floor here, which, as you can see, 5 bedrooms, all decent sized rooms, all en suites, small kitchenette area, nice size kitchen and lounge here. We've then got the same, but 4 rooms on the first floor. Now, one option that's available here is to say, right, okay, when we've converted them, let's sell 1 floor. Selling 1 floor as a HMO, self-contained, in really, newly done condition, it's going to be quite easy. And what that will do is massively reduce the amount that's left in the deal. So rather than having £50,000 left in, you probably end up with £5,000–10,000 left in the actual deal, which is great, because then if you can buy this property, refinance it, and end up with £5,000 left in, and you're receiving an income of £7,000 to £8,000 per annum, fantastic. That's a great start and a great place to be. So that's just one option, and that's one of the options talking about structure and how you can actually work it as well. So it's quite a nice one. So hopefully that gives you a bit of a better idea of how we find the properties, how we then look at the crunching the numbers, breaking them down, and it all depends as well very much on are you going to find a property that's going to be a big conversion? Is it going to be a simple refurb? Is it going to be already done as a HMO? There are lots and lots of different options with taking HMOs on board. But with ourselves, we look at a couple of different structures. We'll look at different strategies, and we'll look at actually what works best with your plan. Now, if your plan is to retain as much as possible and leave 30 to 40, £50,000 in each property, then we can build that in as we identify properties throughout the way. Security, so importance of best foot forward. So quite often, and one of the reasons that I left this step in is not really to go into huge detail, but one of the points that I would get across, and certainly something that's worked well for me over the years, and when I was talking to people, is people often find good opportunities. Oh, a couple of people have raised hands. It's easy, guys, if you just want to ask a question. You're able to ask a question in the chat, because raising hand, I can't actually do anything, I'm afraid. It just makes me aware that you want to ask a question. So yeah, if you want to ask a question, type it in the chat, and we'll be able to answer that for you. So yeah, sorry guys, I was just saying about the security. So one of the things that I find is putting your best foot forward. So what that means is you identify the opportunity. It's then really important how you structure that, how you position that offer, making sure that you're putting the best foot forward. So is it a cash offer? Are you using our finance? Do you have your solicitors in place? Do you have your figures straight? Do you have your story kind of practice? And it's almost like that, the old days of where they say, practice your picture in the mirror. It's the same sort of thing, but you can do it on an email, or we can help obviously, but ultimately you want to make sure that when you're securing the property, you're putting that forward. And also keep in mind different elements. So if you have to get planning permission on a property, if it's in a particular area or it's of a particular size, then you can always put an offer subject to planning permission. So you can exchange, or you could put an option agreement in place. So you could say to somebody, look, I'll buy this property off you for £100,000, subject to me getting planning permission. The benefit of you doing that is that you secure the property, you're taking it off the market, the seller can't pull out of it, and you can then spend, £2,000, £3,000, £4,000, £5,000, wherever it is on the planning permission. That's your risk, that's your element, but hopefully you've spoken to the planning and you're comfortable that you can achieve it. If or when you do get the planning, you're then able to move on to start developing it to the HMO that you're looking for. Securing it is key. We do a lot of training on securing because it's important to buy the property at the right price. It's important to get your position across as best as you possibly can, and it's important to obviously make sure you're getting the deal that you want that works for you as well. Structure. So looking at, are you going to be cash, mortgage, purchase, looking at rent to rent or peer-to-peer options. So how do you intend to buy the property? How do you intend to finance it? Will there be works done to the property? Are the tenants already in place? How do you intend to manage it as well? Structure for me carries lots and lots of different areas, and for me these are the parts that I particularly get excited about, because I feel that there's so many ways to look at property. That really good example is that HMO that we just looked at, which was the pub. So not many people would have identified and said, right, okay, leaving £50,000 might work for some people. Other people might say, it's actually limiting what I can do because I want to reuse that money as much as possible. Whereas actually, we look at the structure and say, well, let's convert this floor, let's sell this floor, and then let's retain the top floor, or vice versa. It's ultimately giving you an income going towards your goal, which is ultimately what everybody's doing this for, is to hit that goal. To then say, right, okay, this is part of the goal. This gives me money back in the bank to go on to the next one, but it's also giving me now £7,000–8,000 income, and I've got a nice asset there as well, which I've managed to get my money back out of. So the structure is really important. It's really cool as well, the types of things you can do with the structures, particularly with HMOs. So, HMOs on a larger scale, you can split them in levels. You can split them into smaller units as well, but it's just having that imagination and thinking, right, okay, what can I do? How can I utilize this as best as possible to get the maximum return from it as well? So you can probably see I get a little bit giddy talking about structure, so apologies, guys, to get carried away a little bit. But I think it's really cool. I think there's so many things that you can do, and you've really got to step back away from it and look at not just the structure of the actual purchase or the sale, but also the structure of the property. Are you getting the most out of each space? One of the biggest lessons I've learned from property HMOs is kitchens. I purchased 2 commercial blocks in Warrington, converted them into HMOs, so 9-bed HMOs each. Had everything done, they were all getting converted, looked really nice, right in the town centre, absolutely brilliant, 3-minute walk from the train station. And they weren't massive HMOs, but they were nice, double size. And my kind of process was like kitchenettes in them. I then went down to inspected obviously at different levels, different stages, went down to inspect when the kitchens were fitted, and, completely felt like the world had ended almost, because they were full-size kitchens in a HMO room, and probably to you guys now, when I say it out loud, I actually feel stupid saying it out loud, but ultimately that was a lesson that I learned, because, when you walked in and the room's got this big worktop in, and they weren't like enormous kitchens, but even just the depth of the worktop, and there's so many ways that you can actually reduce that space now and hide the kitchen, so utilize as much area as possible. That the first thing I do now when I'm looking at these types of structures is make sure that we're maximizing that space, because there's so many things. Another really good one as well that we learned from a particular building that we're doing a HMO conversion on was the HMO rooms downstairs. Instead of having windows in all the ground floor rooms, we put French doors. And what that allowed us to do then was to give every single room downstairs a small courtyard or garden area, if you like. Now, those rooms went quicker for more money and have never been empty, because people love the idea that actually I can open the double doors and sit out and breathe some air and everything else. So just some kind of, again, looking at the structure of the space, the layout, the fit out, right the way through the whole process, maximizing as much as we possibly can. Packaging as well, so stress testing your exit, making sure that obviously you're prepared. I talk to people a lot about this when we're looking at deals and analysing deals, because for me, it's always having three exits. So not just looking at an exit to say, right, okay, I'm buying a HMO, I'm going to convert it, I'm going to keep it, I'm going to rent it, because something can happen, things can change, COVID can come, there's different aspects. So always keep in mind, is it saleable? What would I achieve if I was going to sell it? Is it a case of, and particularly as well, if you're working with angel investors, so if you've got angel investors putting money into your deals and they're expecting you to refinance and repay them in total, stress test it. And also as well, if you're dealing with angel investors, show them the stress testing, because they'll love that. They will love the fact that you sit there and say, if the house market price goes down by 10%, 20%, I can still repay your money, or I can pay you, say, 70% of the money. The rest of it will be paid in the rent. And this, because they'll realize that actually you've took this serious, actually you've looked through this and you've done it in the right way. And that's really, really important. So yeah, I'd say definitely working on the packaging. Set up an HMO cost saving. So another key area, more sort of operational, but making sure that temperatures, thermostats, and I suppose rules as well, making sure that everybody that lives in it is almost a community, making sure that people are aware, what the rules are, how it works. We always like to get a little manual printed off and left in a room so people are aware of what's in the local facilities, but more importantly, what the expectations are of it as well. HMO cost savings is probably a tough one, because it's more through the planning process. It's more through making sure that you've utilised the space, you're getting the absolute maximum from it as much as possible. Looking at the different strategies, so for HMO, excuse me 1 second. Yeah. Sorry, I thought someone had messaged asking a question. So obviously students, professionals, rent to rent, hostel, lodgings, shared house. There's lots and lots of different ways that you can utilise it. For me personally, we focus purely on professional, and that's what we look for in a particular area. It's not to say that students don't work or rent to rent doesn't work. We've got a rent to rent portfolio. What we found with student properties in particular is that more and more universities are actually getting more switched on to actually, we can get government funding, build our own, and then the students have to use these. And you're finding that in areas like Coventry, some in Bristol now, it's slowly starting to happen in cities in particular, where the university are building their own pods, etc. And people are struggling with the student side of it. So just be aware really, and make sure when you're identifying who's perfect, make sure you look at that. Looking at the difference between the north and the south, so we have slightly different packages for investment levels, which we'll touch on shortly. We've taken a typical example of what was invested, what the gross profit was, the expenses, and the net profit. As you would expect, it's higher obviously in the south, typically due to house prices. All our examples that we talk about and look at are on our website, or on social media. So please feel free to go through, have a look at what's going on. I know, as an example, Liam, our franchise manager, was at a site just yesterday, day before, did a walk around video talking and published that as well. How we work as a business, so through our partner arm, so we provide training, portfolio plan of what we're going to do and how we're going to do it. We identify HMOs, so bear in mind we've got the largest network of property sources in the UK, identifying good investment opportunities for you. We look at the works, the funding options, so we're a peer-to-peer lender, but keep that in mind so that we can help with the funding. We set up, instruct management with tenants, and then we start to generate hands-free return as well. I mentioned a moment ago about the finance, the funding. So our peer-to-peer lending platform can offer 100% of funding needed for all profitable opportunities. So the easiest way of looking at that is we work, the simple rule is 70% of GDV. So we will lend up to 70%. So let's say you find a property at £100,000. It needs £100,000 spending on it. So you need £200,000, and once it's done, it will be valued at £500,000. 70% of £500,000 is £350,000. So we'll end up to £350,000. So therefore, we will fully cover your costs for the £200,000. Joining a franchise model with proven results. We've been doing this for 3 years, over 100 franchisees. Here's some of our happy chaps. I just picked on Mike there because he's not smiling in that particular picture, but yeah. Here's some of our guys, Mike's obviously much more hands-on, so likes to get in and rip out and get involved in it. He's got a great opportunity there. Sham is less hands-on, prefers to identify the opportunity, bring a team in, and obviously let them manage it, and he'll take the return. As I said, we've got lots and lots of opportunities on our social media, examples on our social media. What sort of returns can you expect? So with the HMO portfolio, 10 to 15% per annum is sensible. 30% return on your equity that's left into the opportunity. And typically 50 to 150,000 pound income per year, with a profit margin per property of 15 to 20,000 pound per annum. So kind of a snapshot really of where, you know, a really good income can be generated, rather than just having sort of savings that aren't generating a great return. You can put them to use, not just in generating a capital growth, but also a rental return as well. In terms of our training as a business, we bring in experts to provide you with training on particular dates. Oh, see, we just got a question there, guys. Just bear with me a second. So how does funding work for franchisee partners when HMO already identified and marketed by franchise network? Yeah, so it works the same. Well, Shiraz. Hi, Shiraz. Nice to see you again, mate. Yeah, so it works the same way. So our franchisees, so we've got a very large portion of franchisees that ultimately either just source property or are developing property. So we don't actually have a huge amount that will retain the properties. So, you know, things like this, they would identify a HMO opportunity, they pass it on to our partner. If our partner, like Shiraz, wanted to purchase the property, you can do that, and you can use our funding to do that. So we can provide you with the funding to purchase the property, to do the works, obviously subject to meeting the guidelines, the 70%, etc. And then you can refinance it and repay the loan that way. Hopefully that's answered that question for you. Yeah, in terms of the training events, so we run training events throughout the year, repeated every 4 months, focusing on things like introduction to HMO, planning and structure, funding and licensing, refurbishments, conversions, developments, finding and managing tenants as well. Package setup and operating costs. So to join our franchise, become part of the national brand and trusted, tried and tested strategy, have the ongoing support and training, unique funding facility, and one-to-one support and mentoring, £17,500 plus VAT. We do have a management fee, which covers tenant support, off-market HMO opportunities, email, phone and video support, CRM system, comprehensive training, access to peer-to-peer mentoring, development resources and legal documents, and that's £200 a month. Our franchise fee is 5% of gross rental income, and that's how we operate. In terms I mentioned earlier about minimum investment, so if you're looking to grow your portfolio in the north, we would expect you to have a minimum investment or capital that you're able to either refinance or raise for £100,000. In the Midlands, £200,000, or in London, £300,000. You can be based in a different part of the country to where you build your HMO portfolio. Some of our investors are overseas, and they'll simply buy anywhere in the UK as long as the figures work and they're happy, it meets their criteria. The whole basis of our business is based that, you know, we make money when you're making money. That's why it's successful. Thank you very much, everybody, for your time. If you have any questions, I'm more than happy to answer them. Alternatively, please visit our website, sourcefranchise.co, or drop Liam an email at liam.neck@sourced.co. Thank you, guys. Have a great evening. Really appreciate you with us. Oh, I see a question just popped in. Oh, thank you, Jay. Really appreciate the feedback. It's really nice of you. Thank you. Have a great evening, guys. Do take care. And if you have any questions, feel free to reach out to us. Farid just asked for a copy of the presentation. We can't release the presentation, Farid, but we can actually, sorry, we're sending this out as a recorded video. So yeah, we will send you an email with a copy of this recording so you can look through your own leisure and feel free to fire any questions over. Hope that works and have a great evening. Take care. Thanks, guys. All the best. Oh, Mike's just asked about getting a copy of the deal analyzer spreadsheet. We don't release them, Mike, to be completely honest, simply because they're part of our network and our franchise. That saying, we're always happy to do a share in terms of screen share and go through things like that, or alternatively, you can see them in this video when we send that back out. But yeah, I mean, that's something that ultimately it's there for our franchisees. I hope that makes sense. Ravi, yep, please send the recording. Yep, no problem at all, Ravi. Absolutely, we'll get that sent out. As I say, if you do get any questions, please feel free to fire them over, guys. Right, fantastic. Thank you for all the questions, guys. Thank you for listening as well. Really appreciated. Have a great evening. I'll speak to you soon. Take care.